Welcome back. Now, we are still in Savings Month, and PSG Wealth says that building your financial future is much like building a house. A plan, solid foundation, the right materials and tools are needed before building brick by brick. Thomas Berry, head of sales at PSG Wealth, joins us to translate this analogy in personal finance terms to equip you with the saving strategies that can help you build your financial future. Thomas, thanks so much for your time this afternoon. While it's important to consider, saving strategies, it's also important to consider the current economic environment we are in, and also assessing whether, households, individuals in South Africa, their willingness to save and their ability to save. So now we're talking to an individual that has the ability to save. And let's start there, right? What's the starting point? Perhaps walk me through a savings plan and what that looks like.
Cool, perfect. Good afternoon, and thank you very much for having me, and a warm welcome to all your listeners. But I think that's a great question. I think if you look at it from a savings plan perspective, I think obviously when it comes to saving, you need to save for a purpose. I mean, be that a child's education, be that for a holiday, be that for a down payment on a house, or even saving towards retirement. I think those types of strategies are fundamental to start with. And obviously there are professional financial advisors out there who can help you when it does come to starting on your savings journey. But yeah, I think the most important thing is to plan. I mean, everyone always sees saving as essentially a daunting task because it predominantly is associated with large sums of money. But that's not necessarily the case. I mean, you can essentially start your savings journey or your saving plan just with a 500 Rand debit order. And I mean, throughout time, if you just infiltrate and start that consistent journey with the right habits in place over time, it'll compound over time, which will lead your portfolio to grow.
And let's talk about perhaps the importance of that plan, the importance of having those goals, especially when it comes to sticking to it, the discipline, because we have seen a lot of individuals dipping into their savings when times are tough.
Yeah, so I think ultimately what's important there is if you lay the foundation from the start and you make sure that you monitor the goals from a savings perspective, be that short term, medium term or long term, to make sure that your goals are still aligned to your strategic objectives when it comes to your saving plans. I mean, there's various products that as an individual you can invest in, be that a voluntary investment product, be that a tax-free savings account, or even a retirement annuity. But I think just by way of example, if we maybe use, let's say, your tax-free savings account. So when it comes to a tax-free savings account, you've got a lifetime contribution of 500,000 Rand, of which you can invest 36,000 Rand annually. So if we just unpack that a little bit more and we say, let's start at the foundational phase. Let's start by creating financial discipline and implement a 3,000 Rand a month debit order, which will then allow you to get to your annual contribution limit of 36,000 Rand, right? And in order for you to get to your lifetime limit, it'll ultimately take you just under 14 years to hit that 500,000 Rand mark. And if we just assume the growth over that period is 10% in the specific investment portfolio, in your tax-free account where growth, dividends and interest are tax-free, over that time period you'll actually have accumulated an investment portfolio above R1 million. And although that initially started as small as your consistent 3,000 Rand debit order and sticking to that financial plan, at the end of that period you had just over R1 million, where your interest, dividends and growth on that specific portfolio are tax-free.
And just to backtrack a bit then, Thomas, when we look at, you mentioned something quite important and you delved into saving for growth, which then includes investments and, wealth creation. Are we seeing that happen, or are we seeing a South African saver that's saving to consume?
So I think that obviously depends on various individual needs. I think if you look at the greater landscape, obviously that will be impacted by your high living costs, your income inequality, as well as the low financial literacy that we see in South Africa. So I think that will purely be client specific or client dependent.
All right, so let's get into how we then create or cultivate a culture to then save to grow. You mentioned some of the products that can be used at the top.
So I think ultimately it will start down with discipline, but I think what's even more important is let's say, the type of portfolio that you decide to choose to get you to your end targeted outcome. So if you look at the industry or the landscape within South Africa, there are professional institutions and professional asset managers who actually manage these specific portfolios, which are managed according to specific mandates. And through that, you'll have investment teams which consist of research analysts as well as portfolio managers. And through that, you got your research analysts, which do a lot of analysis around the company fundamentals, looking at the sector-specific information, as well as asset allocation decisions. And through that, they'll ultimately build models which will incorporate whether the stock is a specific buy, sell, or hold, depending on the valuation of the specific analyst. And that information will obviously all be fed through to the portfolio manager,
yes,
which is supported by the investment team, where they actually construct these portfolios, be it a full equity fund, be it a balance fund, be it an income fund, or even a money market fund. And obviously those are all incorporated into the mandate, which is then obviously determined by, let's say, me as a specific client. What is my specific time horizon? What is my risk profile and my tolerance, depending on what certain fund that I'm going to select? And I think through all those choices, there are professionals like financial advisors who can actually help you assist making sure that you're in the right portfolio, given your specific time horizon and income requirements or risk tolerance needs.
And Thomas, do you think, clients, individuals, South Africans are taking advantage of, the information that's out there, considering that South Africa, is considered to have one of the worst savings culture in the world? I mean, the information is there, right? Is it getting to the right people?
So I think as an industry, we're obviously trying to be as proactive as possible to make sure that this type of information lands to the right target audience, to make sure that they understand the benefits of saving and trying to increase the financial literacy of the greater South African landscape. Because, everyone should be benefiting from this. And, you don't need to have 100,000 Rand. You can just start with a 500,000 Rand debit order, or even if it is a 500 Rand lump sum. The thing is, you need to try and start and lay that foundation as soon as possible. A lot of people have jokingly said that the eighth wonder of the world is compound interest. But I think it's only over time, as you start to see that compound interest really taking effect, similar to that example that I gave you in the tax-free environment, really taking effect, where they see the value of compound interest and the benefit of actually starting to save as early as possible.
All right, we might not be millionaires, but we can save like millionaires. Thomas?
Definitely.
Thanks so much for your time and just taking us through some of the products one can choose and put their money away and just start really saving and creating wealth. That was Thomas Berry, Head of Sales at PSG Wealth.